Welcome back to A Week in the Markets with True Potential. My name's George Bell. I'm joined today by Matt Henderson. We are portfolio managers here at True Potential. And over the next few minutes, we're going to provide a recap on some of the key events which have evolved through the course of this week. If we turn first of all to the US, we had an update on the health of the US economy. If we look at how the economy grew in the final quarter of last year, it was actually much more robust than was expected. What were the key observations in the data prints?
Yeah, thanks, George. If we just think about yesterday's release of US fourth quarter GDP growth, we saw a figure come in at 3.3%. So that's slightly higher than what markets had been expecting at around 2%. And if we look at that over the entire year, that takes US GDP growth to around 2.5%. So slightly above the longer term average growth rate that we'd expect of the US at about 2%.
And the consumer has been key to a lot of the growth momentum which we've seen in the States. What were the key developments there?
Yeah, so just drilling through the numbers, one of the biggest increases within the components was actually the consumer spending. So that was up about 2.8%. And really that's driven by spending that we've seen going into the festive period from the US consumer.
So a bit of a surge into the end of the year. That's important because the consumer drives a lot of the US economy, roughly around 2/3 of overall spending in the States.
Yeah, so about 2/3 of US GDP growth is made up from the consumer. So seeing those resilient numbers come through is actually quite good for the US economy and gives us, further evidence that US consumer resilience remains.
And not just good for the US economy, it's actually good internationally if the US is doing well as a marketplace. If we look at some of the earnings as well, I think that's a key area where strength of the consumer is really starting to take effect. For the US economy, the US market, we've had around 25% of companies provide their earnings for the final quarter of last year, and it's actually coming in much stronger than was expected in terms of the sales growth, but also the profitability which has been generated. Certain sectors within there which are skewing those numbers. Information technology has been slightly stronger, whereas energy has been slightly weaker, but in the round, a more positive delivery, but also expectation into the next quarter as well.
I think as well, just to add to that, George, when we've seen companies report strong numbers, we've actually seen the markets reward that with positive share price moves in the following days after those announcements.
So you've got strong economic growth numbers coming through, but what about inflation? What did we learn over this week around US inflation?
Yeah, so US inflation numbers just released just before we stepped into the room today, and we saw core PCE. So core was stripping out those more volatile components such as food and energy from the basket, and PCE is just the Federal Reserve's preferred inflation measure. So we saw that rate actually moderate down from 3.2 to 2.9%, and the month-on-month numbers come in at 0.2%. So just continuing to see moderation of the rate of inflation in the US and see that disinflation theme play out.
And that 0.2% month-over-month increase is quite an important number because that would be consistent with the Federal Reserve reaching their 2% inflation target this year, if sustained.
Yes, and will be important just thinking about next week's Federal Reserve meeting, just how they decide to communicate that change in the data that we've seen so far.
And last time we had a catch-up, we were expecting, or the market was expecting, somewhere between 4 and 6 0.25% interest rate cuts to come through from the US over the next 12 months. What are the current expectations in the market?
Yeah, so we're still roughly at that rate. Market's currently looking at about 5 interest rate cuts. So by the end of 2024, looking at getting to about 4%.
And sticking with central banks in Europe, we had the European Central Bank who left interest rates unchanged, but there was a shift in terms of the way in which Christine Lagarde, who heads up the central bank, was talking about the future of interest rates. What were the key developments in Europe?
Yeah, slightly different policy backdrop to what we see within the US and Europe. We've seen a similar case in terms of where inflation's has been high, starting to moderate, and has certainly moderated faster than the rates we've seen within the US. However, where it differs is that growth backdrop a lot weaker than what we've seen out of the US. So comments, as you've mentioned, from Christine Lagarde has sort of indicated that members of the voting committee are starting to think about when they're going to reduce interest rates, and the guidance that they've provided to the market was that would come about roughly at summertime in terms of when we could see the first interest rate cut out of the ECB.
And along the way, there's certain aspects that we'll be keeping a close eye on. Examples, supply chains, as we see developments emerge within the Red Sea. So there's always risks to the view, but we're keeping a very close eye on these developments. In terms of the Bank of Japan, again this week, no change in interest rate, but a development in terms of the way in which they were discussing the trends that they're seeing in respect of inflation. What were the key observations from Japan?
Yeah, once again, very different policy backdrop from Japan relative to the US and also Europe. Still using negative interest rates, which is obviously very different to other developed market economies. I think one of the key points that members of the BOJ have been thinking about is the rate of inflation that we're seeing in Japan sustainable? So Japan's come from a very deflationary backdrop where they've struggled to really generate any inflation in the economy. And, the reason why central banks target 2% is to try and help stimulate growth within the economy. So they're really focusing down upon that wage inflation number. Can that stay high to keep price level inflation high too within the economy?
And on Monday morning, we set out the key events over the course of the week, and we listed a number of central bank discussions. The one we didn't mention was China. Surprise announcement from China. What did we see there?
Yeah, surprise announcement. So the other ones that we've mentioned, markets were expecting, as you've said there, George. China was totally unexpected by the market. So they've looked to reduce the reserve requirement from banks. So really what that allows is more liquidity to get into the market, allows banks to go out and lend more. So that obviously increases the liquidity. And we've seen equities in China respond off the back of that. They're up about 6-7% depending on what index you look at. And that's really just due to low sentiment, under-owned by the market, and also cheap valuations. So when you see a change like that, it can really generate material price changes in those type of assets.
And if we were to bring all those different components together and look at the market response so far this week, if we were to look at equities and fixed income, what have been the key developments?
Yeah, so equity markets higher this week by approximately 60 basis points by yesterday's close. So that's a positive. Within fixed income markets, they're flat over the week. But what we would add to that is actually we've seen quite a lot of issuance from both governments and corporates. So looking to supply more bonds to the market, and actually the market's been happy to purchase those bonds. So we actually see that as quite a positive sign.
So quite a lot occurring through the course of 5 days. Some important positive developments: economic growth in the States stronger than expected, signs of inflation coming down, recognition of those trends from central banks who are now more willing to start to lower interest rates, and the earnings pathway in the States is so far providing some positive indicators. Through the course of next week, we'll continue to bring you up to date here on Modern Markets. But for now, thank you very much. Enjoy the weekend, and we look forward to seeing you on Monday.